What's going on, Schrute Stock Squad? Today is Thursday, March 25th, 2021, and today's video is for entertainment purposes only. In this video, I'm going to be talking to you about the current market conditions, how things have been so up and down, and what you guys should be doing in this current market. All right, so stick around with the family here, and I think you're going to like what I have for you. If you're new to the channel, guys, this is Schrute Stocks. I show you my journey to $1 million openly, transparently, no screen cropping out, none of that BS. You see everything that I do, all my plays, and I show you every day. All right, all I ask is that you hit that subscribe and like button for me if you appreciate this sort of openness. Okay, so with that said, let's get into the video. All right, guys, first off, I'm just going to tell you what ended up happening for my own portfolio. All right, so the CTRM sold on me. Okay, because remember, these are penny stock plays. You do not get caught. 10%, you know how we play penny stocks. All right, 10%, you gotta, if you know, you don't want to be caught when in an anchor that's just gonna tank. All right, it cashed me out, and then what ended up happening, I bought it back in around like the 80-cent mark, or okay, yeah, almost 80-cent mark right there, 7.7982, and that's what ended up happening for me. So because remember what I said in my previous video, 78 cents is a good support level for this stock. This levels though, these are not, 72 is not a support level. So when I saw this thing is coming down to these points, I'm out. You know, my trailing stop got hit, I'm out. But then I see this thing came back to a support level, I buy back in. All right, then I ride this thing back up and we play it that way. All right, that's how we end up doing penny stocks. And I've been telling you guys this, it's risk to reward. You need to understand when to get in and when to get out. All right, some plays you really don't get out of, such as your foundational stocks. So this is going to bring me to my next point, what you guys should be doing during this whole like market like thing. These companies that you have, all right, that you consider foundational, that are going to do well, you should be buying these. These are Black Friday deals. All right, don't think Zomedica, CTRM, CTX, these are not on Black Friday deals. These stocks are penny stocks. All right, you follow what I'm saying? These are penny stocks. These are stocks that can go to like 1 cent. All right, that's a great Black Friday deal. But guess what? It's never going to go back up to $1. There, for every penny stock that you find that's going to kill it, you get 1,000% returns and whatever, there are a million other ones that you will never have that with, and they won't recover, and you're going to be out of your money. You do not do Black Friday deals on those plays. You do them for these foundational ones. So if you have buying power, consider that. So I'm going to give you a play which I want to say I think I could definitely see having a quicker recovery. Skills, I could definitely see this one coming back to its previous highs relatively quicker than some of the other ones. Other things I want to say, MP, guys, MP is just such a cheap deal. Look at this. This is a company which I personally, here's where I'm sitting at right now. I'm considering actually buying back in on Plug at some point, and then perhaps going in on MP and Skills. All right, that's what I want to say. Reason why I say Plug Power, in the video I mentioned yesterday how they did their they have to correct their financial reports and things like that. They also, here's the thing, none of the big investors in the play have cashed out. They haven't sold out. In fact, Wall Street has given it some new ratings recently. They upgraded their price targets on this thing. I wish I had the numbers in front of my, I don't have my notepad with me, sorry. But I remember when I was looking up earlier today, recent updates from the Wall Street, you know, all these analysts, they upgraded their price targets and they haven't dropped them. They're not low for the year. And that's why for me, I still see more potential in Plug than some of these other things. Now remember, Plug Power is hydrogen fuel, right? It does hydrogen. Do I think hydrogen is going to outdo EVs? Probably not. Do I think that they're going to outdo, you know, that whole realm? No. But do I think that there's room to grow in it? Yes. So if you're talking between Plug versus, let's say, a big one that, I don't want to mention names, but a lot of people are, you know, so bullish on fuel cell. Fuel cell is, okay, if you're going to go between fuel cell and Plug, let me tell you, you should consider Plug over fuel cell. Now, again, not financial advice, none of that, you know, none of that BS, but if I was between the two, I would consider Plug over fuel cell. Simply put, because fuel cell has, they have patents and everything else like that and whatever. They've been having that because that's the big buzzword that people have been saying. That's what they start saying on YouTube. They filed new patent technologies, things like that. Guys, they've been filing this crap since 2010. That's what they don't share with you because they half the people don't even know that. Fuel cell has been in the game for a long time. Why haven't they hit why is it now that they're doing this? Okay, ask yourself. Just if you want to go on fuel cell, I'm not going to tell you not to do it. It's just be cautious. I'm sure you can make a lot of money off of it. I don't want to say I'm almost, but I'm sure you could. The thing is, be cautious with it and know when to get out and when and what you're doing with the money. Have some risk management on it and do that. If I'm between fuel cell and plug, I would go with plug. The thing is, plug is also, especially with the financial reporting and stuff like that, it's still a little bit, you got to play a little bit cautiously on that as well. Of the two, though, I'm more bullish with plug than I am with fuel cell. Other thing I want to mention here with you guys is all that medium-term layers here that I have going on. X1, CTXR, I haven't made any changes. In fact, I still have that 9,000 sitting there. Overall, guys, this portfolio has been just chilling right now, and I'm not looking to make any big moves at the moment because, like I said, if anything, what I do with this 9,000 coming up in the next few days, I might just start dollar cost averaging into these foundational stocks. And honestly, that's my best suggestion for you because let me tell you, back when I was starting my investment journey, back in I think I started in 2012 or 13 time, and it was an Apple. Tesla is the big one that got me, got me going. But that's when I realized when every single person is speaking so negative and all you see are negative publications out and reports and this, but you did your research on the company and you see where they've been, you see who's running the company. You remember what I said? Whenever you give $1 to the company, whenever you put $1 in a stock, that's like telling them, here's my $1 that I earned. I cannot make more. I don't know how to increase its value, but I trust that you can use my dollar and make a lot more with it. Okay, you're saying that to the CEO, the management, and everyone else like that in the company. That's what you do when you buy a stock. All right, so those plays that you do this with, that's how you end up. That's how you should play it. All right. So that's why having your foundational stocks are very key because there's a reason I call it a foundation. That's what the whole portfolio is resting on. So with this 9,000, what I might end up doing is just dollar cost averaging into these plays. I might go a little bit heavier into skills versus some of the other ones, but skills and MP are probably the two that I would go a little bit more in than the other plays. But again, like I'm saying, I have no doubt with Palantir, STPK, or NEO. It's not as if those I don't think are going to recover or anything like that. I'm not even worried about this. Quite honestly, I haven't even checked the portfolio much today because I did my due diligence on all these things. I had my risk management, strategies set up in place. And so, there's no need to stress. If you do the right research and you do this stock market game can actually be a lot of fun. You can actually enjoy this whole thing. Don't get burned, guys. All right. Let me see what else I have to share with you. Let's see what the other stocks have been up to. Man, remember I called it Cinedigm? I'm just gonna stop looking at that. I feel bad. You know what I saw today, man? THBR, this thing hit below $10. Remember what I always told you? Just because it's a SPAC does not mean $10 is the lowest it could ever go. It can still go lower. It's just to say $10 is generally speaking where they all fall towards. That's the biggest support level that they can have. There are other stocks that have dipped below 10 though that are SPACs, so it's not a hard fast rule. All right. Let's see what else we got going. Jumia, man, these are great prices. The thing with Jumia is this, and people have been asking me my thoughts on Jumia. I think it's a good company, but you got to be willing to hold this for the long haul. Especially when I say long haul, I'm saying at least a year or two, probably more than that. This is a company which is going to have a lot of struggles coming up. I could see this thing almost looking like, I don't say I could see it like a Tesla. The problem for me in saying I could see it as a Tesla is it's a baby Tesla. I don't know how, I can't think of the right analogy for it. It's just they haven't hit as expansive of a market yet as possible. And the thing is, the issues that lie in getting an Amazon type company in Africa are enormous. It's enormous. And not to say that Jumia is a bad company. I believe in it. I think it's a good company. You just have to be willing to ride out the waves such as this. A lot of people ended up buying in on this stock back when it was way up in the 60s, and now, so you end up getting hit like that. Remember, you know what I'm going to do? I'm going to show you something here. Let's look back to the company, Tesla. All right. I want you to look at this 1 year ago. Okay. And I want you to see the dip. Okay. Do you see what ends up happening when there's all of these dips? And then if you at the moment, this dip from here to here looks enormous when you're in the moment. But now we expand this 5 years, it's a blip in the chart. You follow what I'm saying? Expand your horizon, guys. Stop looking at the day-to-day charts and just thinking so short-term. This is how you get burned when you just think short-term in the stock market, all right? I don't want that to happen with you guys. I tell you in every video, I tell you, you guys are my family here, and I don't want to see you getting hurt, and I don't want to see anyone getting burned like that, all right? I give you my approach in this. It's risk to reward, and learn how to optimize it. And that's what I'm all about. And let's look at the other things here. Zomedica. Whew, this thing ran up today. Let's go. I'm still not in Zomedica yet. Like I'm telling you, this is not the time to be going too big on penny plays. I don't know. My opinion is you guys I cannot tell you what to do with your money. I am not confident in the market conditions right now. Just because I see one damn green day, that does not mean, oh, it's bullish conditions again. No, we've seen this for months, for over a month now, There's a good chance this thing could hit all the way back down to $1.50, $1.40s. Then what are you going to do? There's a good chance it could also hit like $2, $3. And hey, maybe I'm wrong. I hope I'm wrong. Quite honestly, I hope anyone who bought it on Zomedica, I hope I'm wrong on it today. Right now, in my opinion, the best moves are to go into those foundational plays, all right? And if you do want to get into these penny plays, if you do want to get in on them, all right, only get in at those support and resistance levels like I tell you, okay? Like I tell you, and don't put too much in. Do not put your whole thing in when it hits a support level or anything like that. This is called dollar cost averaging, all right? I'll give you a quick summary of what dollar cost averaging is. That means you buy it on this day, whatever the price is, on this day, whatever the price is, or that day, what the price is, or depending on a certain level, a certain price target. So you buy it at this price, you buy it at that price, and you buy it at that price. Because you don't know what the market is going to do at a certain point. You follow? You need to be willing to dollar cost average up or dollar cost average down. So let's say the stock initially started at $5 and then it ran up to $8. You buy half of it at $5 and you buy the other half at $8. Your average price is somewhere in the middle. So you didn't get the cheapest price at $5, but you didn't get the most expensive price at $8. You got somewhere in the middle. And yeah, you could have gotten a way better deal at $5 and all that. You could say, man, if I only put in more then. Nobody can tell you. Nobody in the stock market is a fortune teller. Unfortunately, nobody is. And as much as I would love to be, all right, I know Schrute stocks, there's a lot of magic that goes on here. I'm still working on my talent of calling the next day's plays. The last time I called the next day, I said it was going to be green, and the market took a big dump on everyone's portfolio. So I got a lot of work to do in terms of calling that out. But so. That's just it for me. Stick with the safe plays. We're not out of this thing. We don't know what's about to happen. All I'm trying to tell you, though, is if you see these plays, which are really good for long term, I can almost guarantee that you're going to be upset at yourself for going in on some of these other things and not sticking to the foundational ones, because those are the ones which are going to carry your portfolio and make you wealth. Are you looking to make a quick buck? If you're looking to make a quick buck, this is not the right channel for you. If you're looking to actually make wealth, okay, and the difference between what's wealth and being rich and stuff, wealth is when your kids, grandkids, and generations get to be millionaires because of you. It's not a get-rich-quick scheme, all right? This is not a get-rich-quick thing. This is something called get wealth in a sustainable manner thing. Doesn't have the same ring to it, all right? I understand that, but it's way more sustainable and it's way more successful, all right? That's my opinion, and that's how I roll over here, all right? So, you know what I'm saying is I don't want anything bad to happen to you, and I'm just doing this to look out for you. So, with all that said, you know what I'm going to say here. If you enjoyed all the stuff that I've shown you in this video, and you appreciate this openness, transparency, please consider joining in on the Discord. I have the link in the Patreon below. That's a place where we have beginners, experienced investors, and that's where we talk about these plays and what we're going to be collaborating with in next moves. All right. All we ask is that you take the investment journey seriously, and that's it. We can help you out from there. Doesn't make a difference where you're beginning or where you're at, and that's all that's how we roll. All right. All that said, stay happy, stay healthy. Let's get wealthy. Take care.